I'm not here to predict housing. I'm here because a lot of people can feel something shifting and they're trying to figure out whether that feeling is real or whether it's just the internet being dramatic again. Prices haven't collapsed, but the market doesn't feel normal either. And when something feels off for this long across different cities and different price points, it's usually worth slowing down and asking why. So instead of guessing where housing is going, this is about what's showing up right now, what those patterns usually mean.
Yeah. Are you still considering a national emergency over housing?
I'm looking at it.
What
yeah,
would that look
I'm
like?
looking
What
at
would that
it.
mobilize?
You know, there's two thoughts on housing. You have a lot of people have housing that because we have such a strong time and such a strong market, their houses are very valuable. It's a big part of their net worth, their house. I don't want to knock those numbers down.
And how to use that information to actually assess your 2026 instead of reacting after decisions get forced on you. Across different markets, the same things keep appearing. Homes that would have sold instantly a few years ago are sitting longer, not forever, not abandoned, just longer. Sellers who bought cheap and are now trying to double prices are finding fewer buyers willing to play along at today's rates. Higher end homes are lingering, sometimes quietly, sometimes awkwardly. Mid range listings are seeing reductions, credits, incentives, or getting pulled altogether. And the majority of consistent movement is happening at the lower end of the market where people have to move, not where they want to. That detail matters because when markets are healthy, movement is broad. People upgrade, people downsize, people move for lifestyle reasons. When markets are under pressure, movement narrows. Necessity keeps moving. Optional moves slow down. That's not a crash. That's a loss of momentum, unevenly. When a market is functioning normally, different price points tend to move together. When it's under pressure, it splits. Different buyers respond differently, different sellers experience completely different outcomes. That's why one person says nothing is selling, while another says things are still moving. They're not contradicting each other, they're describing different slices of the same market. This is what fragmentation looks like. And fragmentation is important because it's usually the stage people misunderstand the most. When people say buyers have more power right now, that power doesn't show up as confidence. It shows up as leverage. Negotiations come back. Price cuts become normal instead of shocking. Listings sit without urgency. Offers take longer to come in, and when they do, they come with more conditions. But here's the part that surprises people. Buyers don't rush in when they feel powerful. They slow down because power without clarity still feels risky. And uncertainty changes behavior before it changes prices. People hesitate, people delay, people wait for confirmation that never quite arrives. That hesitation matters because housing is a market that depends on decisions actually being made. This isn't happening in isolation. It's happening alongside job uncertainty, higher borrowing costs, and a widening gap between what homes cost and what people earn. Layoffs don't need to hit everyone to matter. They just need to hit enough people for long enough that confidence changes. And when confidence changes, behavior follows. People stop upgrading. People stay put longer than planned. People stop assuming housing will automatically work out just because it always has before. Housing tends to respond to this stage later, not immediately. That's why the market can feel tense long before prices visibly move. If conditions like this continue, housing usually doesn't collapse overnight. It weakens unevenly. The first thing sellers lose isn't price, it's leverage. Homes take longer to sell. Reductions stack quietly instead of dramatically. Concessions become normal. Pulled listings increase as sellers decide waiting feels better than accepting different terms. Expectations reset deal by deal, not all at once, not evenly, not fairly. That's how repricing actually happens in real life, not through one headline, but through a slow adjustment in what clears and what doesn't. This is the part people miss because it doesn't feel dramatic while it's happening. It just feels uncomfortable, and uncomfortable markets tend to stay uncomfortable longer than people expect. This is exactly where HBI comes in. Not to tell you what will happen, not to tell you to jump in or stay out, but to help you watch the right things early enough to plan around them. Because most people don't get caught off guard by sudden crashes. They get caught off guard by slow shifts they ignored because nothing obviously broke yet. If you're trying to assess your 2026, whether you're buying, selling, investing, or just planning your life, this is what actually matters. First, job stability in your industry and your city, not national unemployment, not averages, your sector, your income reliability, your downside risk. Second, how long homes are sitting where you live, days on market, price cuts, listings getting pulled instead of sold. Those aren't trivia, they're early signals that leverage is shifting. Third, who is still buying? Entry level versus mid range versus high end. Cash versus financing. Fourth, credit behavior. Are deals closing cleanly? Or are they falling apart late because appraisals are tighter, financing is slower, or terms are changing mid process? Credit tightening doesn't announce itself loudly, it shows up quietly, deal by deal. And finally, seller behavior. Confidence looks like firm pricing and quick decisions. Stress looks like reductions, incentives, and silence. These signals don't tell you the future, but they do tell you how much flexibility you're likely to have next year. And flexibility is the difference between opportunity and pressure. HBI isn't here to scare you, and we're not here to calm you down. We're here to help you see pressure forming early so you can plan instead of scramble. Housing doesn't change overnight. The people who do well are the ones watching the right signals before everyone else agrees something shifted. That's what we'll keep breaking down so you can assess your 2026 with clarity, not noise. If you found this helpful, like the video and subscribe for more housing and market analysis. And let us know your thoughts in the comments. Thanks for watching.